Good morning, everyone, and welcome to the European crossover webinar. And we're starting out the week relatively a little bit slow. Just about over my cold. Well, actually, over the cold, but my voice is still a little bit hoarse. But for the most part, I feel a heck of a lot better than uh, last week. Well, let's go on and pull up the economic events calendar. We do have the sentiment index that comes in at the bottom of the hour, and for those of you that are new, I'm here in Texas, so these times are set on Central Time. So it's the easiest way if you're looking at it is just add 1 hour, and there's Eastern Time. So there you go. You can see here that like employment trends, they're going to be will be coming in at 10 a.m. Eastern. It's a low valuation, a low tier economic report. So really nothing to speak of for the most part as we come into the States. Consumer credit is going to come in at 3 p.m. Eastern. So really not much of anything. We did have Halifax house prices come in about half an hour ago for the UK, which seems like, I guess, they probably already started the time change, because I was going to say this is a little bit later than usual. Not later, but earlier than usual. So I guess they may have already started the time change in the UK. I believe, you know what? But anyway, like I said, I thought that usually comes in about a half hour after we start the webinar. But anyway, that being said, relatively quiet. We do have BBA mortgage rate put up at 6 a.m. Eastern. Once again, reports that we just only don't really see. But like I said, Eurozone Centex index is going to be at the bottom of the hour. They're expecting a Reuters poll of minus 13. The last one was minus 11.1. So they are expecting to deteriorate a bit. Move this out of the way. Sorry about that. Still some junk in my throat. Let me go on and okay, and as you see here, we had a pretty decent little recovery in the S&Ps. Now, it hasn't made that much of a difference. I even mentioned that in the analysis going from this weekend regarding the dollar yen, because look, we've had a pretty decent recovery here in the S&Ps, and the dollar yen is still not that far away from its lows. So it's just not buying into this stuff. And gold's still holding overall steady. I mean, we had a little bit of a jump, then a bit of a dip. And we just kind of hung around here. There's still the potential for us to slide back in here. Difference is that U.S. yields, look, we're still fairly on the low end. Look at this, boy, 152. And I remember with 157.09, looked like it was going to hold. Obviously, that broke, even lower, which opened the door for, obviously, for equities continue to move lower when we were looking for a move. And boy, was that some kind of a move. Crude oil still relatively weak, but it has come off the lows, but still very, very weak, just at this key level here at this 52.99-ish area here. Yeah, we'll take a look at the cross rates quickly. You can see here Aussie yen still hanging near its lows. And Guppy's still pushing the same thing here. Drag towards lows, but we just mentioned about the yen continued to strengthen a bit here. Euro yen, same thing. We're actually moving towards its lows also. Um, but still overall relatively quiet. You can see here, all these moves down here, very, very low. Let's go and move into the main screen. Actually, we'll just go right into the news. And once again, those that are new, we usually try and we'll cover generally two news stories. Uh, we'll cover the morning bid, kind of gives us an overall outlook for the day ahead. Basically, gives you temperature check, a feel for the flavor, and then from there we'll cover one of the FX pairs. So let me go on and switch into that quickly. Here on when I'm doing the webinar, and once again, we do have a lot of new listeners, so I don't mean to sound repetitive or mention things that may seem rather obvious to other people. So I'm going between different screens. Of course, it's obviously this is a cross rates page. Then I have another one for the majors, and then one that like an intraday page. I'll get to that one real quick. Let me jump into that quickly, and then that's what will be in the news. So bear with us. So just trying to get some of the new people that are here with us with ForexAnalytix, and welcome to get acclimated. This is my own intraday page. I'm looking at one. I'll look at the euro or the dollar index, gold and crude, and I scalp a lot. I generally don't hold. There are traders that hold medium term and those that hold for swing trades like Amanda. Amanda holds for a very long time, very successful too. But each of us has our own trading personalities. But for me, I'm more of a scalper. So let's go on and move into the news. And then I'll get into the analysis. Now, move in here. You can see here, once again, those that are new, we have our different disciplines, whether it's macro, candlestick, basic technical, harmonics, and Elliott wave. I do my analysis here in the basic technical, okay, and I'll be the Asian update. Now that being said, I do the Asian update in the evenings, and now I'm doing that for every day. But this week is going to be the exception because Blake is going to be out. I think including today also. Is going to be out for the week, traveling with his family. So I will be doing the end of day analysis. So I won't be doing the Asian update because I'll have just done the end of day analysis for all those that are in the for the pairs that we covered. Obviously, you can see like all off of this right now, but I didn't show you the pairs. But once again, all the different markets that we're looking at. So let's go on and take a quick preview of the news. And we'll start off with the morning bid, which obviously chopped it off over here. Sorry about that. Market sizes up chances of a trade war and Brexit breakthroughs. Like I said, this is kind of like an overview. We kind of get the flavor for the day. Might mention a few economic reports. Obviously, there's a dearth of activity today, so basically nothing out there. But we kind of get the lay of the land, kind of gives us a flavor, and then we move from there. So world markets tiptoed into what's likely to be a pivotal week for the U.S.-China trade war and Brexit after Friday's U.S. employment report for September offered an equivocal picture of the U.S. economy. Before the European opened on Monday, the all-country index was just in the black after recording its best one-day gain in a month on Friday. The dollar index regained all of Friday's losses, while 10-year Treasury yield stayed subdued just above 1.151%. The September jobs report offered something for bulls and bears alike, with moderate payrolls growth and missing forecasts, but offset by an unexpected drop in the jobless rate to 3.5%, its lowest since 1969. The main takeaways was that it was soft enough to keep the probability of another Fed interest rate cut later this month, and at around 80%, but strong enough to allay the worst fears of an economy about to fall off the cliff. All eyes were on the resumption of the U.S.-China trade talks on Thursday and Friday. Asian markets were tentative first as the positive vibes from Wall Street were doused by a Bloomberg report that Beijing officials were increasingly reluctant to agree on a broad trade deal with President Trump. The next presidential election is a little over a year away, and weekend reports of a second whistleblower coming forward to support impeachment moves by Congress over Trump's alleged attempts to get Ukraine to interfere with the election, the incentive for Beijing to make big deal concessions now is expected to dwindle. Shanghai and Hong Kong markets remain closed on Monday. Well, that's important. For the last day of the week-long National Day holidays, but China's offshore yuan gave back all its gains from Friday to trade at 7.12 to the dollar. In Europe, it could prove a critical week in the Brexit showdown. Two, French President Emmanuel Macron gave UK PM Boris Johnson a week to bridge gaps between its latest compromise proposals and the European Union red lines over the Irish border and other issues. Crucially, Macron declined a direct meeting and insisted the UK officials continue to work with the EU Brexit negotiator Michel Barnier before any round-the-clock push for an agreement at the October 17-18 EU summit. Johnson continues to insist he will take the UK out of the EU with or without a deal on October 31st, even though he's legally bound by a parliamentary act to seek an extension if no agreement reached by the summit. Eurodollar was steady at just below 110 after another dour signal for the Eurozone's largest economy. German industrials fell 0.6 in August, more than forecast, stoking speculation of a worsening industrial recession on the continent. The big debate in Europe now is whether the European Central Bank is near maxed out with monetary easing to support the economy into another downturn, or whether Eurozone governments can step up its fiscal spending to take the pressure off. Change of the guard at the top of the ECB is seeing hawkish factions within the bank flex their muscles, and critics of the ECB's easing turning up the heat. On Friday, 6 former Eurozone central bankers criticized ECB's policy under outgoing President Draghi, saying it has been unsuccessful and probably aimed at bankrolling indebted governments. Former IFM chief Christine Lagarde takes over the ECB later this month. Eurozone stocks open lower on Monday. So let's just go and quickly cover one of the pairs, which is the yen. Creeps higher amid caution over Sino-US trade talks. The yen gained slightly and the yuan slipped on Monday as investors nervously awaited US-China trade talks this week on signs of whether the two sides can de-escalate or end their punishing trade war. Risk appetite soured noticeably after Bloomberg reported that Chinese officials are signaling they are increasingly reluctant to agree to a broad deal pursued by Trump. Nothing is yet in the bag, and optimism on trade has proved time and time again to be misplaced. The Japanese yen regained its safe haven by the virtue of Japan's status as the world's largest creditor. The Chinese yuan, the currencies most exposed to trade war tensions, fell more than 0.3. Other trade exposed countries such as Aussie and the Korean won also fell on doubts that much will be achieved in the trade negotiations. Deputy-level meetings will be held on Monday and Tuesday, with top-level talks scheduled for Thursday and Friday, when Chinese Vice Premier Li Hu meets U.S. Treasury Representative Robert Litzinger and Treasury Secretary Steve Mnuchin in Washington. Global markets have been on a roller coaster ride this year as hopes for a deal have been waxed and waned, while weak economic data in Europe, the U.S., and China have added to evidence that the intense negotiations are dragging on global trade and growth. Jitters knocked the dollar from a two-year high and remained subdued on Monday against a basket of currencies. So that's where we stand. No, we're going into any further details here, but we're going to move on to the analysis. As I said, if you go here, for those that are new, you can see here's my basic technical right here, and we'll start out with the analysis right now for the euro. Let's go on and swing into that. Bear with me. Okay, and let me go and pull up the So once again, for those that are new, here's the bias chart analysis, and we'll go on a template, I guess you'd call it, and we'll go on and start with the euro and start with the daily as we kick off the week. So it says the euro held its head above critical water, which is 967. We know it's important for the hold, and right now we're right there, 967, but made no headway beyond the key level, which is 1020. Resistance is 1020 with the support at 919. So we're kind of hanging ground right here, kind of sitting here doing a whole bunch of nothing. Um, you can see here we've got a nice downtrend line that's really keeping this market in check, and the critical level comes in here at 1020 right here. We're just kind of marking time here. We did go on to manage it this way, at least at this point now we're at 967 and a half, so we're just a half a pip above this key level at 967. Now for the longer term, I like to look, for my longer term, I'll look at the 2-hour charts, and you can see here, right here, you see here, it's actually 965. I remember about last week or 2 weeks ago on the way down, I was looking for that for support, and you can see that that actually held. It's actually 965.9 or something. So it's 966. You can see that we held there, and then we bounced around. But when we look on the daily, it's going to be this 967. We're right there. But where's the real support come in? The real support's going to come in down here at 919, because we can step down here. There's some decent support here at 939, basically 939. 940, but where's the real test for support? It's going to be, if we break below 919, it's going to be somewhat dour for the bulls. And right now, it's if you think about this, considering we already got past NFP, they thought, okay, now the euro finally start to, maybe not launch, but see some short covering. Really disappointing. Like I said, we held above 967. Basically treading water, but we made no headway, because the real headway is going to be to get beyond 1020. And let's take a look here. And you can see that downtrend line. Here's that 1020. That would get us about a close above 1020. Would not only get us above this key area, but also be breaking that support. So the support here is going to be 919 as we kick off the week. There is some support if you're day trading it at 939, okay? But where the rubber meets the road is going to be 919. We can slip beyond 939. Maybe we get down to 931. Maybe we get down to 929. Kind of move a little bit. But this is where the real support comes in. At this point, it's bulls would have to definitely defend that. Definitely be an Alamo stand, or we're just back, sliding back down, new lows all over again. And on the upside, well, we haven't really done anything. You see what I'm saying? So we can bebop around up to 990, 1005, but the real resistance is going to come in at 1020. So as we kick off the week, here's where we are. The bias is clearly still down here in the euro. Boom, there's where we stand. So let's go move into the cable. I'll beat this one more. So let's go and take a look here at the cable. And these are pretty light here. Usually my analysis is a little bit more, a little bit further. But you can see here, cable's just sitting here doing a whole bunch of nothing, treading water. So that's exactly what it does say. Cable has been treading water all week. Key resistance is the 2482 with support at 2216. So we're just basically marking time. You can see how we spent all last week, just basically treading water. We kind of touched a little bit on the downside. We came back real strong, touched a little bit on the upside, but look how we spent the most of the week just sitting right here, marred in this tighter range here. I guess we get, as we get ourselves stored already ahead of Halloween potential big break here. So we'll see what's going to happen. Certainly the risk has been always to the downside, if you think about it, or that's been the norm here. Upside moves have been quickly shot right back down. So right now we're looking here, we're saying the resistance is going to be 2482. Well, right now, if we look on here, 2482 is a real strength as we come up in here, but on a much shorter term basis, you're going to be looking right here at 2406. 2406. So let's go with that. Anywhere in between, the market just be bopping around without any real, you can jump up real quick, but until we actually get above 2406, there isn't really anything happening. We're just kind of pushing around backwards and forwards. Now on the downside, we said the support's going to come in at 2216. Same thing here. You can see 2248. It's not until it's about 2216 right down here where you actually start to see, okay, now we're into some key support. So once again, as we start off the week, we're going to give a little bit broader perspective to see where these markets going to move. But we're in very, very quiet trading on a Monday. Bear with me. And with that, let's go move on to the Aussie dollar. Okay, the Aussie is attempting to put in a bottom, closing at its best level for the week with Friday's close. Resistance is 68.09 on a close is key, and it would challenge the downtrend. Support will be 67.15. So you can see here, we really need to go and push this up in here, and with our see resistance here at 68.09, you can see here right there, because that would close above 68.09. You can see we'd be taking out this close right here. Resistance be very important. Look at that, how much you'd be taking out. You see that? So you'd be right across the board here. Not only that, if you did close above it, you'd be breaking this downtrend line. So let's see here. And support is going to be 67.15. Right down here. You see that coming across here? That's going to be key. You break that and really opens the door for us to just roll right back down the hill. So it's going to be 67.15. We had a little bit wider parameters for Friday's trading because obviously with the NFP, we had to allow for that volatility. On with the Kiwi. Kiwi has found mild short covering as it has successfully defended major level 62.08. Upside resistance is the key weekly 63.89, which seems like a long ways away, with support at 62.68. So you can see right here, here's that key 63.89. It goes way, way, way back here, but a very key level here, 63.89. And really anything in between, we're just going to be bouncing around. So it's going to be 60. It seems like a long ways away, but not necessarily. Look how far it's fallen back. Just a little bit of short covering will put us right there, but 63.89 will be the key resistance. Let's mark this off. And showing here support is 62.68. So it really needs to hold above this area right in here, right there. You see that? Right there. It really needs to hold that area. Let's pull this down here, right there. There we go. It really needs to hold that area here. It's actually 68. It looks like a little bit lower. It needs to hold this area here, or we just end up breaking down here with the potential to break past that 62.08. And once again, like I said, 63.89, if you think about it, as oversold as this market is not that far away for it to just jump up back then. That's a real resistance. let's go move into the dollar CAD. So it says here the dollar CAD served notice to bears with a sharp turnaround midweek, but has been unable to close below. Say close below, meant to be close above the daily resistance of 33.36. You can see we're right there. Initial support is 32.88, followed by 32.56. Yeah, I mean, you can see here, boy, we really look like we're going to fall apart. You can see here, look at this. This market looked like it was running out of gas. Look at that. Just looked like it was ready to go in and fall over and take out 32. I mean, look, I think this was Tuesday. Look at this move here, and we make look like one more last hurrah. We can't even take out the highs here, and we finish way down here. And boy, did we stage one heck of a turnaround and stopping out a lot of people. Now, the key area was, okay, now let's get that new leg up. Let's get that close above 33.36. You can see, which would take out this whole area. And we simply have not been able to seal the deal above this 33. But there's no doubt, nonetheless, that it is bullish right now. Support comes in at 32.88 and 32.56. And the 38.88 is coming in right in here. There, 32.88. And then followed by, you can see here, the 32.56. Now what we're going to do is we're going to put 33.36. Well, it's already at 24. I mean, the 32.82, but it's 33.36 on a close, and it's no longer range now. It's bullish. But it's key that they get that close above 33.36 on daily close, 32.88 right there. With that, we'll go into the peso. Says the dollar peso bulls launched a respectable return rally to 1987. The pullback is stretching at this point, and value support comes in at 1944. A daily close below 1932 negates the most recent rally. Upside resistance is 1960. So, we were looking for that rally, and we kept our bullish bias this entire time because we said we wanted to give it the benefit of the doubt because we'd gotten above this 1923.6. It definitely needed to hold the 61%. It did, and we saw a very nice return rally. It's got us up to about right almost at 1987. I think it was like 1986, 965 or 6. Like 96, like I said, 98.6.5 or something like that. But anyway, and we've seen this pullback, but boy, the pullback was a little bit more than I would have expected. I mean, I would have expected some to come in at 50, maybe 52. So we did dip just a hair below 50. Resistance for right now, going to keep pretty tight, is going to be at 1960.5. Let's just call it 1961 for today. And we're going to put this at 1947, tighten it up a bit. Really needs to hold this area here. Still bullish overall, okay? And with that, we're going to move into the dollar yen. We're just about ready to come out with the Centix index. Eurozone Centix index. Expect a negative 13 after a minus 11.1 previously. That'll be out in just about 20 seconds. We'll keep an eye on the euro. Oh my goodness, minus 16. Look, so an even bigger drop. But not much reaction on that investor sentix index, the Eurozone. So previous was minus 11.1. The Reuters poll was looking for minus 13.0, and it came in at minus 16.8. So far, not much reaction. Not that I expected much out of the euro, but boy, even bigger dip. Current situation worsening down to minus 15.5. And the expectation survey is deteriorating to minus 18. So all bad news across the board for the Eurozone. And let's go move into the dollar yen. Kids, as the dollar yen has spent the week moving lower as equities have come under pressure, the pair is not yielding to the return rally in SPOOs. Resistance is 744 with support at 648. So once again, like I said, you're seeing here a nice return move, or decent return move, I guess you'd say, in SPOOs. And look at the dollar yen. It's like you wouldn't even think that there was even a rally in the SPOOs. You see what I'm saying? So it's not even buying it. But as we looked at the beginning of the on the news story, I was looking at the beginning of the news story. It was saying that they had trepidation about the upcoming Sino-U.S. trade negotiations. A moment. And so let's take a look here. As I mentioned, we'll give it the stretch here. We're looking for 744. Now, like I said, that isn't necessarily for today because look how oversold we are. We can see a little bit of short covering, but what it does do is, and 744, it would be up in here. To put in perspective, that being said, and we're going to move to the 2 hour, at least you know where I'd say the risk area is. So you can see right here coming just above here, 744, right there. You see here, you're looking like any moves back there. If you were to look here, you think, man, the S&Ps didn't rally at all, and sure enough, they have. It's just that there's a greater concern how things will work out with U.S. and China. So with that and the yen being a safe haven currency, boy, it's keeping its bid. So we will go on to start the week. It's quiet trading. We're going to recognize what that risk level is. It's going to be 744 on the dollar yen. And support. I don't know where I got that thing from. Oh, okay, because it didn't update on the 2 hour. There we go. And support is 648. Let's go move into the cash dollar index. And for those that are new, the focus on this show in the European crossover are on very short-term support and resistance. Many of the traders in the room who do not necessarily scout, but what they will do will incorporate some of these levels here on the bias chart to factor in with their own entries or exits. So just so you're aware of, like I said, the focus on the European crossover is really for the day's support and resistance that is good for the next 24 hours is what we look into. Now, we are offering a little bit wider range here as we start the week because we just got past the U.S. employment report and also today's trading absence, quite a bit of economic activity is practically nothing. Well, we'll start out the market's kind of feeling its own right now, and we're saying, hey, this is, and in quiet activity, you can kind of bump around and not really have done anything, bump around, maybe move up, the euro could move up 25 pips and think, okay, it's getting ready to break out, we're hitting resistance, and really nothing's going to happen until we get to 1020. Everything is just kind of bouncing around, so you kind of know where you're, just like the dollar yen, if we bounce up a little bit, it isn't until you get to 744 that is your risk level here. So let's go move into the cash dollar index. And the dollar index finished the week at its lows, but remains a whisper away from 99 even, with bulls remaining confident. Immediate resistance is 99.11 with support at 98.30. So here we're tightening this one up a little bit because we already, the dollar index is still holding up very well. But you may still have some bulls that are like, okay, you know what, I'll lighten up just a little bit. So you can see here, we're not giving it too much room, but you see right there, 99.11, right there. I'll pull this back. See right there? If we get above that, that would really try and push them a little bit higher. So let's move this up in here. There we go. 99.11 on the upside. With support at 98.30. So we're going to allow for this to, there we go, let's move this up in here. There. We're going to allow for this to, if it starts to rotate lower, once again, it's just like the dollar yen. Where's your risk level? And we'd say, hey, if we start to slide, not to expect it today, we could start to ease back today, but if we were to start to slide by tomorrow, where would we be? Potentially, we could come down here to 98.30. We have more resistance if you look here on the 2-hour chart, not resistance, but support down here, which is this zone here, 98.14. Let's pull this back up. You see here, but we're a long ways away from that. But that's a fantastic bottom of the zone here. But I think that you have this support coming in here at that 98.30 here. Let's go and get rid of this. Once again, we had a little bit wider on for Friday because of the potential volatility with non-farm payroll. With that, let's go and move into the cross rates. Boy, this market is just dead as a freaking doornail. So it says the QEN is making a stand at 67.15. A break below on a daily close opens a challenge to 66. Resistance is 68.40. Wow. I mean, look at this thing. Just quiet as all get out. So it's going to be 67.15. Bear with me. I go get the bias chart. And resistance. Let's take a look at 1 2-hour. It's going to be right there. For right now. Actually, right there. 67.79. Boy, look at this dollar yen. All yen just strengthening up against everything. Um, the euro yen remains under solid pressure. Resistance is 1830 with a daily close above 1895 to negate the recent downside action. Immediate support is 1679. So we see this immediate support for 1679. And let's go on and move into the 2 hour. Boy, this thing looks sick as a dog. Look at that. But really, the yen is doing very, very well against all the other pairs. I don't know why that thing showed that date thing. I don't like that thing there. I don't know how to turn it off. Now, as far as yeah, for starters, we'll keep it pretty. Well, that's too low right there. Yeah, it's going to be right there at 1766. Actually, right there, 17. I think we did mention 1769 right there. Sorry about that. Let's go into the euro on. Everything's trading very quiet. Euro, I mean, I don't think we even moved on that news, basically. We traded 964. On the euro on, the euro on has eased back from the pivotal 63.41. You can see that here, the 63.41. Look at that. Very cute right there. Let's pull this back. See it more clearly. Euro has eased back from the pivotal level of 63.41, confluencing with 63.49, which is a 50% of the 39.09 to 67.89. Immediate support is 61.76, followed by 61.40. So you can see here it's all about the 63.41. Now, how much further can we go in and pull back? It's reasonable they could pull a little bit further back. We'll see what happens. So once again, here we are at 61.76. They need to hold that level here, but that'll be that first key support right there. Let's go and move into the Euro Kiwi. The Euro Kiwi is stalled at 75 even. Key support on the pullback will be 72.54, below the pivot of 73.09. The pair needs a daily close above 75 to exert upside momentum. So you can see that we've just kind of just stalled in here, and we're just kind of just marking time. We are above this key pivot, the 73.09, but we're marking time. You can see they got to get back above 75, and so we'll call it the 75.03. We said 75 cents. It's 75.03. Need to get above that. You can see here to generate some new upside momentum. Be key. And on the downside, still a wide range right here, but you can see here we're trading in a very wide range. That's the problem. So it's going to have to be 73.09 here So 73.09 to 75 even. 73.09 is a pivot, but you can see we're trading in pretty big ranges here. So it's going to be 73.09 for the support. And once again, you can see that the wide ranges we're trading here in this Euro QB. Let's go move into the ASEAN. Just looks so sick. The ASEAN has found some minor support, minor short covering in the last 2 days. The pair needs a daily close above 73 to relieve bearish pressure. A daily close below 71.86 opens a challenge to 70.70. So right now, we're not that far away. 71.86, they got to hold that. They get a daily close below that, and it's going to be, you know, much lower. So 71.86 here on the support. And that's a daily close. Let's go put that asterisk there. They got to hold that daily close. On the upside, as I mentioned, they need to get a close above 73. Certainly doesn't look like it right now. To relieve the pressure, doesn't change, makes things bullish. But resistance for right now is going to be right there. Right there. 72.75. That's immediate resistance. Now let's go move into the guppy. Well, this continues to sink after just a phenomenal run here. And the sterling versus the yen. Obviously, the yen's doing well against everything. It says the guppy's pullback is taking a pause. Well, not right now at the moment, but you can see here we kind of held our own here. It's taking a pause. A daily close above 32.80 will allow the pair to move back to 34.31. A break of new lows will target 30.40. Well, you know, we're pushing right now here, and you know it's tough sledding. Let's take a look at a 2-hour chart to see if we can see something. But we're at some key levels right now, and you can see there, right there. We got to hold this area. We really need to hold it. The 50% back is 31.14. We're going to use that as our support. 31.14. We'll call it 31.12. And on the upside, looking at this 2-hour chart, for starters, we got to get above this area here. 32.06. And lastly, let's go and finish up with sterling odd. Okay, it says sterling odd is treading water with a slight downward bias. The pair has twice held the 38%. You can see that right there. The pair has twice held the 38% pullback, which is 81.41, just above the major level of 80.89. Bulls need a daily close above 83.48 to maintain momentum. On a very short haul basis, there it is, 83.48. That's the resistance right there. We need to get above that 83.48, and that is going to be resistance. You can see it right there coming across. You see there? 83.48 coming right across. We got to get past that. Support is going to be this. Let's take a look at a 2-hour chart. It's going to be right there at 81.82. And with that, let's just go and take a look at the general market. You can see here, crude oil is still pushing up a little bit higher, but we've come off our lows, but it's nothing of any real consequence. If you're looking at it on the 5-minute, you're thinking, okay, well, now they're struggling right here, and there's another level here, but it isn't of any real consequence to think of. You see here? I mean, we can see whether or not we're at a fib here. You see, they have to get to 53.93 just to get to the 23%. They're still a long ways away. I'm working on a 30-minute here. Right there at 53.67. That'd be something right there at 53.67. But should be paused. But I think we can still maybe even push up here and challenge 54 cents. But right now, like I said, there's nothing of any real. You can, and right here you can see this kind of like a medium-legged doji. Yeah. I think it's still stretchable a little bit here. I think it's a little bit quiet activity today to start Monday off. We're seeing gold a little bit under pressure, just a little bit here. We're kind of rotating a bit lower here. And the dollar index is seeing just a bit of a bid, not a whole lot in euro. Same thing, very, very quiet activity. Saw a nice rebound here in dollar and the S&Ps, but it hasn't made any impact in the dollar yen. So I think we're going to kick off the week to start relatively quiet. We're showing that right now. But that's what we have. I'll go and get the bias chart posted in the room. Thanks for joining us here on the European Crossover webinar.